Good evening, everybody. My name is Shen from the Dan Cooper Real Estate Group in Oakville. I am an agent on Dan's team. I'm happy to be with everyone tonight. This is another successful round of our monthly investment series webinar. We decided to put these webinar series conduct these webinar series on a monthly basis because we see a lot of opportunity in the pre-construction market, whether that be pre-construction townhomes, pre-construction condos. And we have the best of the best in the room tonight. First and foremost, we've got Simeon Papailias, who is the co-founder and CEO of REC Canada. Woot, 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 Simos.
Oh, man, what's going on?
Simos is a legend. He's a mogul in this space. Him and his company have sold over 700 plus units last year throughout the GTA. Again, if we are looking at investment plays, both in and around the GTA, whether if it's focus more around building equity, focus more around cash flow as supplemental income, these guys can definitely help you out. And this is why Dan Cooper, again, a legend with Royal LePage, specifically in the Oakville, Burlington market, but we also play very well in downtown Toronto, is here to join us because he's partnered up with Simos and Jazz from REC Canada to help us grow our investments division. And together we're here to inform, we are here to educate, we're here to share ideas and help our clients in so many ways. So thank you, Simos, for joining us tonight. Dan, thank you very much. Guys, please say hello and then we can get started.
Well, as always, I'm honored to be here. I'm always excited with new partnerships. And this isn't so old. We started in June, kind of in the heart of COVID. And if you go back to those 5-6 months ago now, a lot of what we covered stands not true. And it's not, nor is it to say we told you so to anyone. It's more to truly enforce that the real estate market is truly predictable if your opinion is based on true fundamentals. And just like this relationship with the Dan Cooper Group, we couldn't be more excited to work with Dan because it's founded upon not transactional real estate, but relationship real estate. Our clients are our everything, your clients, Dan. I know our conversations and what they mean to you. So I'm honored and humbled to be here, and I look forward to another great chat.
Thanks, Simos. And hi, everybody. I'm happy to be here as well. I personally get a lot out of these seminars. I mean, I may be part of it, but to be honest, it's nice to play in this space because as Simos said, you know, there's a lot of misinterpretation as to what really is happening in the marketplace right now. So it's nice to sort of have an open discussion as to what really is happening in the trenches out there.
So tell us, what is happening, Dan? And I'm probably going to turn to you next as well, Simos. But Dan, why don't you give us an idea of what the stats were like for October? And more importantly, and I'm getting this from all of our clients working on the front line for your great organization. And Simos, again, I'll ask you the same thing. Dan, go first and tell me, what do you see with the October stats and where do you see the market going in the next 2 to 3 months?
You know, it's been an incredible ride. We're playing catch up, a lot of pent up demand from a slow spring for obvious reasons. But if you're asking what's happened in October, we do have those numbers, and year over year, we have had increases in homes about 14% over last year. And even the number of sales is up over 25%. And then the average listing days on market, it's down 26%. So, I mean, it really is kind of favoring the seller. I mean, if anybody is thinking of selling right now, it's a beautiful, beautiful marketplace. But on the flip side, it's an amazing time to buy as well because we have unprecedented interest rates. So, you know, I mean, why is that? I guess, I mean, you know, TerraNet just released some numbers talking about we've just came out of the highest October we've ever had in 22 years. So, we've played catch up very successfully. So yes, for the first 5 months of this year, we were, basically shut down, but we've over delivered. I mean, it's incredible right now what's going on in the marketplace. And I think most of that is because the fundamentals are there. And you couple that with the fact that the interest rates, we're now borrowing. Whoever thought you could get a mortgage for about 1.8, 1.7%? I've even heard 1.5. So that means you can borrow $500,000, $500,000 for about $2,000 a month. Hello. So why isn't everybody borrowing this free money and take advantage of it? And you want now more than ever, you need to leverage yourself and take advantage of that compound interest. And you want a second and a third property. And that's the whole reason we're doing these investment seminars, is because I meet all these great people. We do a great real estate transaction together. But it's just recently we've prodded, we've gone deeper and found out a little bit more about their financial integrity and realize that they have equity here, they have money there. And it's really time to put that money to work so they can create a legacy for themselves and their family. And to that end, we've uncovered the fact that this whole concept of pre-con works extremely well because you can borrow almost for free. And on the flip side, you can put next to no money down because we have these special VIP family and friends deals thanks to CMOS. And so suddenly in 4 years from now, you're buying something that is probably worth $100,000 more than you paid for it. And so then the numbers work. So it's kind of cool. That formula means the numbers do work in Toronto. And if you don't want to stay in Toronto, you can go to the burbs. It doesn't really matter. We go wherever the deal is. So again, the big reason the market is so good and the fundamentals are there is immigration. The Canadian government has a plan to bring, I think it's a little over 1.2 million people into the country, and a lot of them will stay in the GTA. That's over the next 3 years. That's 400,000 new people a year.
Yeah.
So, think about that for a minute. So you've got all these people that are lining up to buy real estate, and we've got a real serious shortage. We got a real crunch. We have pent-up demand, we have no inventory, and we have low interest rates, and we have a market that basically is on fire because we're on the cusp of a vaccine. That's pretty good news. So we all know, the markets are, they're fickle as it is, but they're more up than down based on the positive news. And I think this uncertainty will come to an end sooner than you think.
Yeah. And I think that those are tremendous points that you're making. I definitely want to address a lot of the commentary that people are seeing in the news, and of course the media always is led by if it bleeds, it leads. So the media's job is to make sure that their newspapers and their advertisers see the light of the audience. The headline can have a house on fire, but the actual article is typically responsible. So the attention grabbers and the actual story are two different things. So I do want to remind everyone that as we go on with this pandemic, and we've seen all the adjustments and the planning by our government, who's handled it, in my opinion, extremely well. Anybody can argue with anything they want, but as far as I'm concerned, a country that takes up half of the continent of North America with only 30 million people, and we are an exemplary economy on the planet. As far as I'm concerned, you can hate or love our government, but we're afloat. And when I see the Oakville market stats up 18.9% year to date, I think this audience that's watching us tonight isn't doing too shabby. If they bought the house for $1 million last year, it's worth 1.2. So I think it's pretty competitive with what you earned in wages or more, because this is net money. So as far as the outlook is concerned, again, we represent a tremendous amount of investors specifically. So I get this question at least 12 times a day. Should I buy right now, or should I stand on the sidelines and wait? The answer is not the same for everyone. So if anybody expects me to say buy now, that's the wrong answer. It's going to be a 100% based on your circumstances. And if you're speaking to Dan, if you're speaking to me, like hell, I would ever tell anybody to do anything that doesn't fit their picture. So the consultation where you leverage our experience, I'm going on 15 years, Dan's going on 25 or plus years. This is what we do. So it's a matter of taking your situation and looking at how to best leverage everything you have to make that grow faster, stronger, and better. With money at 1.5, 1.8, 1.9%, you would seriously be foolish to not take advantage of it if you can. So if that strategy is right for you, meaning that you're employed, you're comfortable, and you can borrow money at 1.9% and make 20% a year or higher, it's truly, it's an understatement. We're talking about pre-construction. Pre-construction, we talk about it so much because it's easy, meaning it's very easy to understand. The terms of it are laid out very easy, meaning that you don't have to come out with a big bag of cash right now and qualify for a mortgage right now. So it's basically your down payments are spread over time. And so as the development moves along, your down payment goes in there. The incentives that developers are putting together right now are incredible, from the stretch deposit structures to parking being included in the purchase price. I remember back in 2017, people were paying 80, 90, 100 grand for a parking spot. We're getting that into the development now. I was interviewed last week by the Globe, and anybody can Google it and take a look at those articles. The 905 is on fire. So for the first time ever, the suburbs of Toronto have taken over the condo market from the city of Toronto. Why is that? Well, why would one think that is? So Oakville right now has 5 developments that we have control over. 5. The Butler, Nouveau, Berkshire, Oak & Co. What was the other one by Green Park that we did about a month ago? Dunn West. So we're talking about major development, and people are buying in markets like Oakville, like Mississauga, like Richmond Hill, like in Durham. Why? Because there's more space, there's more value, there's more bang for your buck. Toronto right now is a scary place because it's so dense. During the pandemic, in a month or in 6 months or whenever this thing breaks free, you're going to see what happens to the prices in Toronto. Because the prices in Toronto, after 6 months of getting badgered with a pandemic, last month, the average price still moved up by 1%. Yeah. So even, I'm talking in the face of disaster, the city of Toronto is the place where people want to live, period. And I'm not referring to Oakville over Toronto or Toronto over Oakville. I'm talking about as a country. People want to be here. This is where they want to be. So after 8 months of badgering and shutdowns, you still have the market moving in a specific trajectory and direction. These are the fundamentals that we press on to our clients. This is the stuff that we share with our audience.
Yeah, it's amazing to see how much development is still going on out there. I mean, in our own backyard, Dan, like it's phenomenal, right? What's going on in the Preserve and Glenorchy and the Joshua Creek area, you know, the whole Dundas, Trafalgar little patch. But I mean, I just sold a pre-construction townhome over the weekend. And I mean, like, there is a lot of fervor still in the market. But, you know, one thing I want to understand, and thanks for clarifying, like how the 416 is coming out to the 905 a little bit, but maybe you can give us an idea, Simos, on what makes it so advantageous to buy in this exclusive VIP phase, and how do you go ahead and secure some of these allocation units, as you call them, with the developers, so that they're pre-vetted, knowing full well that what you introduce to your clients, to the DCG clients, that it's a sound product to invest in?
Yeah, so I think people have to understand the development process. So how it works is very simple. So the development process in Ontario specifically takes typically 5 to 7 years before a shovel is in the ground. So anything that you see being sold today was purchased anywhere between 2 and 7 years ago. And depending on how close to a developable site it is how quickly you're going to get out to market. When somebody buys a parcel of land for 10, 20, $30 million that are going to develop into a high-rise site or a mid-rise, whatever the case may be, the minute that that ink dries on the contract, time starts ticking, meaning interest is accrued, costs are incurred, development, planning, subdivisions, the committee of adjustment, the LPAT, all the process that for a project to come from a paper drawing of an architect to a site that's developed and you live in, it's a long process. So the minute that the development company decides to move forward and that clock starts ticking, the quicker they can get you to live inside the unit, the quicker they're going to get paid. Their profit is only materialized when you pay for your condo at the end. So what does that mean? That means that they're going to go for their planning, their permits, their approvals. The minute that they get that stamp of approval is the minute that they can actually sell a unit. So when they can sell those units, they go first to a very select group of agents called the platinum agents. The term is getting a little washed up at this point because every person out there with a license wants to be a part of that group, but it's just not how it works. There's, let's call it 10, 20, 30 agents in the entire GTA, over 60,000 agents that have that true access in those relationships with the builders and development companies. And from there, it keeps going from there. In every stage of development thereafter, the prices go up. Why? So the very first round, the developer is going to say, hello, Simeon, hello, Dan, come over here. We're looking to get to a threshold of 50% so we can get our construction financing. We have 300 units to sell. I'm going to release 100 units to you guys. Can you sell them? Can you help us get to our target so we can achieve construction financing? The minute they achieve that construction financing, sales stop, not because they don't want to sell. It's because they're going to hold the inventory to sell it for a higher price as the market moves on. They weren't born last night. So the people who buy first, the people who are going to support that developer bring a project to fruition, are the people who are going to benefit the most. First in, most profitable out. It's as simple as that. So the minute that they hit those 50 units or 100 units, the first target, price goes up. They release 30 more, price goes up. So it goes from platinum to VIP agent to the public. If you drive by the highway and you see register now, it's already too late. It's long gone. You're paying 50,000 more bare minimum because you've already missed 6 stages of sales.
I'm glad you brought that up because anybody can drive by those signs and they don't need our help. You know, they can go register and, you know, buy their own unit, but they are not getting that rack rate that we're going to give them. So the beauty of this and the whole reason I have this affiliation with your company is the fact that we are cherry picking the VIP units, what we term the family and friends deal. So all my VIP clients are my friends and they are getting much better terms. Can you spend a few minutes telling people what, like, for example, I know you mentioned parking's a lot less, but in many cases, if you go off the street and try and buy your own unit, you're going to be paying $35,000 for parking. How many times have you done a deal with me where parking's included? Go on, and I just want to hear about the incentives from your perspective.
Well, there's a lot of components to it. It's not just the parking. So if you're going to go in off the street and you're just buying a second suite for yourself, there's just a lot that the average consumer just does not know the minutia of buying new construction. What's included, what should be included, what's not included. What do those clauses in that book of an agreement of purchase and sale that you're buying? If anyone thinks that the developer is making a fair agreement of purchase and sale, you couldn't be more delusional. They are protecting themselves from delays, from acts of God, from the economy, from themselves, meaning that every single thing in that agreement of purchase and sale is into the favor of the developer. It's not fair, as my director of team operations, Bobby, says, fair is what you pay to get on the bus. So this isn't a fair agreement. It's not a negotiated resale piece of property. This is an agreement that you agree to because you're going to be part of this early group. So the right to lease during occupancy. So in Ontario, for example, when you buy a new construction condominium, there's about a 6 to 8 month period before it's registered that you're forced to take possession. There's a payment of around $1,500 involved during those times. If you didn't know that and you didn't negotiate to have the right to lease your unit during that time, you're going to be out of pocket for 6 months to a year, which happens all the time to people because they just didn't know that you're going to have to bleed money because you're not moving in there. But if you do have the right to lease during occupancy, a time where you just pay kind of a standard fee, this is going to be your highest cash flowing period of your entire ownership, because you're not actually paying the real principal down. You're just covering the builder's interest. And we can get into that, but that's one example. Assignment, the right to be able to exit your investment if you had to, or move it to a corporation. If you didn't know that you may require that, because life can take a turn, you wouldn't have it. And you might lose your deposits. If you didn't know that there's development charges on new construction, to have those capped, you can end up paying $50,000 to the city at the end. It's not the developer's money. They're not taking it from you. But in my clients, your clients are always going to have capped development charges, meaning that your client will pay up to $12,000 on closing. And if there's more, the developer is going to be on the hook for it, not you. There's a lot of little things. So everybody thinks it's all easy, it's all fun and games. It's not. So negotiating these things for the client, protecting the client, and making sure that their deal is wholesome for them, good for them, profitable, and safe. That's what it's all about. That's how the deals are structured at this phase. And there's not a single one that we've done that we didn't have those specific incentives laid in.
So you've got a lot of people who are jumping in the market for pre-con as first-time buyers. You see a lot of folks in that camp. But Dan, with your valued clients that you've helped over the years, I mean decades, you've got like a mixed bag of valued clients that are coming to you, asking you how to invest their money. Could you maybe give me a scenario of some of your clients that have maybe a primary place of residence, an investment property, maybe a vacation property, how you sort of assess the entire portfolio and how you work with CMOs to kind of line them up into the right investment strategy?
Well, I mean, I think a lot of people just have buried money in a property equity that they just don't think about. And, most people that have been in a home for 10 years, their debt to loan ratio is probably less than 50%. And they've got built up, everybody has built up equity, because if we're talking about how prices in October went up 14%, overall this year, they're up over 18%. So everybody's got extra equity and they're not thinking about it. So you really have to do a pro forma and look at all your investments and your assets and try and make sure that you do have, a large percentage of that into your real estate portfolio. I mean, that may be against what my friend Kevin O'Leary says, but depends on the day if he likes real estate or not. But I've loved real estate my whole career. And to be honest, if I look at myself personally, I've never lost money on a property. And I'm sure a lot of people would say that. How many times have I've worked with a set of clients where I haven't seen them in 10 years. I sell their property and, I sold it to them 10 years ago for 300,000. Now I'm selling it for them for 1.4 million. And I always say, why didn't you buy the whole street? And obviously that was a lot of money at the time. But if you just look at the ride that our generation has got through real estate appreciation, it is insane. And it's pretty much guaranteed. And at least, during uncertain times like now where we have COVID and so on and so forth, the stock market is fickle, as I said, but at least with real estate, you can walk around it, look at it and hold it and touch it, because, it's something you can actually really believe in. And, we just try to assess our people. We do the numbers, and so instead of just selling a property for people, now we go the next step after the first deal's done and say, okay, how else can we help you? And we talk to them about, the pre-con, and pre-con can mean many things. I'm just talking about investment real estate in general. And that's something that CMOS is very much into, because it doesn't have to be in downtown Toronto. And we talked earlier about how the 905 area code really played catch up. And that's kind of cool. And due to COVID, 905 is on fire. And, you know,
that
people,
was definitely the catalyst. It was already going that route with Mississauga blowing up, like the Square One district blowing up. And then this COVID was the absolute catalyst. Like Oakville right now, those, especially the three that I just spoke about, Nouveau, Butler, and Berkshire. Right now, it's Fernbrook developing the Butler. We have Nouveau by our good friends at International Home Marketing Group providing us access to that. There are lineups to get those units. Berkshire, a luxury little development on Lakeshore, right by where Dan used to live, 2 minutes away, literally. Absolutely phenomenal site. And there's only a few units. So if anyone from this audience, like I would imagine they're predominantly living in the area. So you know your market and what it's done. You don't need to be convinced, which is half the battle, to have confidence in where you live, because it is Canada's most sought after two cities, Oakville and Burlington. They keep passing the torch to each other every year as to the best city in Canada to live. I live there. I know it. I understand. It's a beautiful place to be, and it will continue to be that way. So if you have been there for 5 years or more, you know guaranteed there's a specific amount of equity that you can access and take advantage of the ride up. It's only going to build the legacy for yourself and for your family. As far as I'm concerned, it's a no-brainer.
And it's the mid to high density that is really on fire right now. Anything up to about $1 million you cannot keep in stock. And it's just based on the fact that debt is so cheap at this time, because first-time buyers have so much more improved affordability compared to last year even.
Well, Dan, you also got to think, like, we can make funny presumptions that people who live in Oakville, Burlington are rich. People are people everywhere. There's rich, there's middle, and there's low. So I don't listen to the noise and the nonsense. The product that's going to market in Oakville that's on fire right now are smaller condominiums, starter condominiums, where everybody's kids don't want to move to Toronto so far from home, but they cannot afford a $1.5 million home in Bronte Creek. But they can afford a $600,000 beautiful little condo up the street. We are servicing a real need for real people. This is how cities are built, more powerful and stronger when you service all segments of the population. So Oakville up to now was servicing more to the higher sector, but you run out of space. You can't have 80 by 200 lots everywhere and forever. It doesn't work that way. That's the beauty of real estate. At some point, you can't go out, you have to go up. And Oakville and in Burlington is experiencing the beauty of that trajectory right now.
So let me ask the two of you actually this question, right? So we get this a lot where people come to us, they ask us for a real estate action plan. We combine forces, we sit down, we assess people's portfolio, and we give them an idea on how they can build wealth in real estate. But why don't you sum up like an example for me? I remember, Simos, we were on a call with a client 3 weeks ago. And, you know, this is a typical valued client here at the Dan Cooper Group. And they want to get into real estate investing, but buying multiple units and possibly property managing each unit might be a little too cumbersome for this couple, for this family. So what they're looking to do is right away, you know, they've got a $5 million primary residence. They've got a $2.3 million investment property in Oakville. They're turning to the Dan Cooper Group to advise them on what to do, right? With all this equity that they've built up. They've got $1 million of accessible line of credit, $600,000 in RRSPs. You know, we want to make some moves is what they're saying in real estate investing, but the one-off individual pre-con condo might not be their vibe. So what would you suggest in a scenario like that for bigger plays for maybe high net worth clients?
And it's not just for high net worth. I mean, I met with a couple, that was a great example that you were speaking of, and we can speak to it. I met with a couple yesterday. The wife is an actual firefighter in Mississauga. The husband is a high school teacher. And this is like, we're talking about salt of the earth, real people. that live amongst us. And do you think they have time to go cut grass on Saturday? No, they're going to take their kids to hockey. They're going to do what they need to do, like anyone else. So for them, potentially an income property does not work. Does that mean they're locked out of investing in real estate? And the answer is no. They can make many, there's many passive plays. I remember a couple of maybe two investment episodes ago on yours, you had you had Equiton on, Cliff Fraser, where he spoke regarding how to invest in REITs that actually invest in apartment buildings. And you can be part of that ride up because it's the safest asset class you can invest in. So if you have, call it 100,000 in your RSP and it's sitting there earning 3.5%, 4%, and it keeps going up and down with volatility of the stock markets or mutual funds, it's time to maybe take a look at being introduced to some other ideas. There's many. All people have to do is reach out to the group. And there are many referrals that we like, and I know that that sounds weird because we sell real estate and we're saying don't buy real estate, but we're blessed enough to sell enough real estate that we don't have to force anything down anyone's throat. And we can give them sound advice based on their circumstances. I don't need to sell any one unit to anyone to be okay. God bless. So I'm in the fortunate position to be able to give sound, honest, and advice that I truly think will benefit them. And I know as a fact that you do the exact same, which is the only reason we work together, is because we're always looking to suit the right way of doing things to the right person. You got to match what goes to each person. If you're high net worth, you have tons of options. If you're not high net worth, you have tons of options. Just reach out and get the right advice.
Awesome, thanks. So we're near approaching the 30-minute mark. I wanted to thank you, Simos, for coming to the table once again with all your great information. Dan Cooper, we've got some projects to sell here in Oakville. Some really good projects, like Simos mentioned, like Nouveau.
I will mention just one last thing. I know it's not in Oakville. A developer looking to get started with construction out in Durham region in March is looking to finalize their inventory, and that we have 15 units right now, downtown Whitby, that carry a 3-year rental guarantee, a 3-year maintenance and condo fee credit on closing, and a 3-year property tax credit on closing. They need these units moved in the next 2 weeks so they can finish their financing. It's a tremendous opportunity for anyone who has any question as far as what the market will do over the next few years. If you're scared of volatility, you have a perfect investment that will start in 2 years from now and carry you for another 3. So your next 5 years are a guaranteed performance. If anyone is looking for something like that, or they're scared of market conditions, this is one way to pretty much guarantee your position for the next 5 years.
What's the price on them?
Anywhere between $600 and $725. And they're beautiful, big 2-bedroom, 2-bath units. 10 minutes from everything in Jordan. It's a great product. If anybody's interested, just reach out, Dad. You let me know.
So hello@Dan Cooper is how you can get in touch with either Dan or any of our agents for some more information about this particular product. And I encourage everyone to book some time with Dan. You would say what, Dan, 15, 20 minutes for just a nice friendly conversation, get some ideas flowing. And if anybody wanted more data sheets, more brochures, a price sheet, maybe some floor plans, we have all those renderings available and readily accessible for you. And before I let you go, Dan, one more thing. I want to talk about, I got to talk about the resale market one more time. And then
guys, I'm going to take off. I'll leave you guys to it. I want to thank you for bringing me on board. I wish every single person, your clients, your friends, all the best through the holiday season. I think we might see each other in December. I hope, COVID allowing, but if we do one more of these before Christmas, I'd be happy to be here.
Thanks so much for joining.
Everybody, I'm logging off. I'll see you guys soon.
You bet. So yeah, Dan, just a little bit more about the resale market. I know you had a few trades over the last couple of days and even the last 2 weeks. Could you give us an indication on, locally, from a resale perspective, we talk about investments, and we obviously have some options there. But just for all of our viewers, what's going on in Oakville? What's going on here in Burlington in our own backyard when it comes to people thinking about listing now or perhaps down the line?
You know, I can sum it up and just say that the market is on fire, and I don't see it quitting. I see no relief in sight, and that's a good thing, because going through the spring taught us some lessons, because it was good. In fact, there's so many things with COVID that are good, because everybody went back and regrouped and retooled and rethought their businesses, and the new reality is completely different. So that's huge in the real estate space. We've got all new technology. We're so much more virtual. Everything is paperless. It's all hands-free now. I don't know. I mean, it's very, very positive right now, and the signals going forth look really, really good. Yes, it's a seller's market right now, but it's also a buyer's market if you want to take advantage of free, cheap money. So really, it's favoring buyer and seller. But right now, if you've got a property that you want to move, it's like we just listed one yesterday, and we have 3 offers on it tonight. So, you know, I'm excited, and you know, we still have our boardroom. We can still bring people into the office and have these chats. We got a new cappuccino maker. It's all good.
Just let's do it all in a safe manner, which is what we're doing. Kudos to all our agents out there within the Dan Cooper Group that are helping buyers through this very competitive market, right? You need a solid agent to walk you through the entire offer process, whether or not it's either geared for multiple bid or not. You still need a sound agent to walk you through the buying process. And if you're looking to potentially sell, I suggest, again, you just book a consultation session with Dan at hello@dancooper.com. Sorry, could you say that again, Adam? Meetwithdancooper.com. That's the address. Meet@dancooper.com.
Hold on, which one is it?
It's meetwithdancooper.com. I got it straight.
And website, Dan, or like my email is dan@dancooper.com. So either way, you're going to get us.
You're going to get us. And thanks again for your time. The market's hot. Let's go sell some real estate and enjoy the next coming months.
Thank you, Shen.
You bet. Good night.
All right. Good night.